Hey, hope you guys are doing well today. Welcome to this video. So in this video in particular, I had a thought this morning that I wanted to talk about. I'm going to start and see what happens. I wanted to talk about the data feed differences between Interactive Brokers' data feed and other data feeds that I've had the experience of using, one of them being CQG and in comparison to Rhythmic, which is the other one. If you're interested in learning the truth about the quality of the data you're receiving from brokers like TD Ameritrade or Interactive Brokers, stick around to watch and listen to this video. And don't forget to leave a like on the video if you enjoy this type of content. Cheers. Okay, so first things first, everything I'm saying in this video is from my own experience of seeing this stuff, okay? It's not something I'm just making up off the top of my head. So you can do it yourself. You can do a direct comparison between platforms and data providers, and you will see exactly what I'm talking about. So I have a video on YouTube where I compared CQG's data coming from AMP Futures to Interactive Brokers' data from IB's platform and running the data through my other platform, which is called Jigsaw. And the thing was always the same. It appears to be 100% true that IB's data is updating slower, I think at about 1 or 2 times per second. So what you're doing is you're getting an approximation of the data. You're not seeing every update of the bid and ask spread. So you might ask, why is this relevant? Why do I need to see every update of the bid and ask spread? Well, I can kind of answer it. I'm going to say it depends on your trading method and how you look at the markets. So if you're a scalper, what a scalper does, you're trying to answer a simple question, which is, can I buy it lower than the current price or can I sell it higher than the current price? Now, the means you go about determining which side of the market you're favoring, that's a topic for another video completely. But at the end of the day, you're trying to buy low and sell high. Now, for you to buy low and sell high in the short span of maybe a minute or less, I would argue that you would want to see every possible update of the bid and ask spread. Now, if you don't know what the bid and ask spread is, it's this right here. Okay, now it's near the top of the screen here. I'm just gonna go to a different part of the video. But essentially what it is, it's the market. The bid and ask spread is the market. It's the price of the best bid and the price of the best offer, right? And it's constantly moving around all day long, and that's what the market does. I guess from my perspective, I want to see as many possible updates of the bid and ask spread as possible. I don't want to see a data feed that looks like it jumps from there and then it jumps back and then we see a little move and then it jumps back there. I don't see what happened there. I want to see what the bid and ask spread is doing even when there's no transactions trading into the market, because it is certainly possible that traders can pull their bids and offers when there's no transactions trading, which will essentially move the price of the market. So all this to say is that platforms like Interactive Brokers, TWS, TD Ameritrade, and probably a whole bunch of other brokers that provide market data to retail customers are doing this exact thing, which is called approximating the data, which results in the client receiving a data flow that looks kind of choppy. But the thing is, when you look at it on a chart, you don't notice it. It's only when you look at the market in the form of a ladder like this, where you see the price on a vertical scale and the bid and the offer, and we're moving up and down. I don't know about you guys, but this is the most logical way of looking at a market. Charts are arbitrary and they're for context purposes. If you want to learn more about that, check out some other videos on my channel, and also check out the channel eMiniOS on YouTube. You can also check out channels like Fat Cat and Gary Norton. The basis of this video is that I want to make it clear to people that the data quality you're getting from bigger retail brokerages is not high quality data, and it's certainly not data that is reliable for scalpers. And you don't have to agree with me. The point of this video is not for you to agree with me. What I'm doing is I'm throwing a seed out there, and I'm saying you should definitely look at the quality of your data and compare it to other data providers and see which one works better, which ones are snappier, which one performs better under crazy market conditions, etc. And you need to make the choice for yourself. Just a quick note now in regards to equities data, so data on stocks. I am not aware of data that could be compared to the speed of CQG's futures data right now for equities. So unfortunately, I cannot help you there. So if you said, listen, I trade Apple, I trade NASDAQ stocks, and I want the highest quality, fastest updating bid and ask spread that's out there. I do not know which data is the fastest for US equities, but I can absolutely tell you that Interactive Brokers data and other data providers, they are approximating their data and they're showing you slower updates. So which is why sometimes in crazy market conditions, you can see the price jumping up then jumping down. You don't see which prices were bid, which prices were offered, which prices attempted to offer and couldn't offer and then bid back higher. You can't see all that stuff when your data is lagging and updating 1 time per second. You need the quickest update of the bid and ask spread for a scalper. That's going to be the end of this video for now. I honestly just wanted to plant that seed for you guys, and I want you to do your own research. Now, that being said, for the futures traders here, I have been comparing 2 futures data providers, that being CQG and the other one being Rhythmic. And there is a very apparent difference between the two. If you think there's no difference, then I'm going to link you to this video now, and you're going to watch that and look at the difference between these 2 data feeds. You need to also read up a little bit on the CME's website about MBO data versus MBP data, and they are quite different. They even say it themselves that MBO, market by order data, it actually requires a much higher bandwidth, which means that when the market is experiencing crazy volatile times, that this kind of data, MBO, has a higher probability of lagging. Now, I don't know about you, but I don't want to lag ever. So that's the end of the story. I'm going to leave you guys with that. I wish you the best. If you enjoyed this video, subscribe to the YouTube channel, and I will catch you in the next one. Take care. Bye.